The big breaking focus remains on those absolutely terrifying growth numbers which have crashed to a historic low, and we're still decoding and unpacking them. We're joined by Rathin Roy, who is formerly part of the Prime Minister's Economic Advisory Council, also heading the policy think tank, the National Institute of Public Finance and Policy, and is now on his way to head the ODI, the Overseas Development Institute, as Managing Director. Thanks very much indeed, Rathin Roy, for joining us. Now, Rathin Roy, the point is that since those numbers have come, there has been a kind of pushback by the government. There have been claims that it's not really that bad. We've just had on the Chief Economic Advisor on this very show just a short while ago, and he was saying that there is a V-shaped curve, that basically it's a V, we've hit the rock bottom and now we're starting to see an uptick. Are you seeing any of that?
I don't know about the alphabets describing economics, but let me try and explain to your listeners what has happened. Our economy normally grows because we are a developing country. For the first time in 31 years, our economy is not growing. It is doing the opposite of growing, which is it is shrinking. This shrinking is substantial in the first quarter. We have shrunk by as much as 23% of GDP, which means that we have to recover 23% of GDP, that is a quarter of the economy, in the next 3 quarters. If that is a V-shaped recovery, then it would mean that we would start growing positively in every single quarter from now. And if that is the Chief Economic Advisor's contention, then I'd be very interested in knowing where he got that sort of comfort. I simply do not think that our shrinking of the economy is going to stop after this first quarter.
You think it's
the service sector
go ahead.
is still shrinking. Manufacturing is picking up, but very slowly. The boost we got from agriculture in the first quarter is over. The next boost will come with the Kharif crop, and that will be the third and fourth quarters. So I'm skeptical about a so-called V-shaped recovery. That's one.
Okay.
Second, if we must look at alphabets, the V could be a U, which is we could have gone to the bottom and we can stay there for a while before we pick up. And we simply don't know which of these alphabets will apply.
Okay.
What we do know is the economy has shrunk substantially in the first quarter, and this comes on the back of a declining growth story last year. The economy is in serious trouble.
Okay. The other sort of defense of what is going on is coming again, not just necessarily from the government, but allies of the government like S. Gurumurthy, who, as we know, has been a long-time ideologue of the sort of the Sangh Parivar and is also on the RBI board. Now, he says he's citing data to show that India's crash is actually not as bad as the rest of the world. He's saying the world data of cut in GDP, US minus 33%, UK minus 21%, Singapore minus 43%, Japan minus 28%, Canada minus 38.7%. Now, there's a little bit of confusion on this, Rathin, because I've seen a very, variations of this floating around on WhatsApp and social media. It's not clear to me whether this is a like-for-like comparison, because what we are looking at is really what has happened to India with this quarter compared to the previous similar quarter last year, and the same for all other countries. This doesn't seem to quite match that.
Srinivasan, what is the source of this data?
That's not made clear.
Well, then how can I comment on a data whose source is not clear? What I do know from the sources I have, which include the OECD, is that the latest available figures show that the deceleration we have seen in the growth rate in India is probably comparable to the worst performing rich economy, which is the UK. Now, remember, these are very tentative numbers. So 1 or 2 percentage point doesn't mean we are better or worse if we are trying to play a cricket match.
That's what
the UK has also declined by more than 20%, so have we.
In
That
fact,
data does not show other economies declining by the same amount. So we can certainly say that the economic hit that India has taken has been as bad, if not worse, as the worst performing rich countries.
I was about to say the same thing, because the chart that we had, and I'll try and see if we can put that up, this is comparing India to the rest of the world's growth, is actually showing India as the worst. The same source, OECD. So India is at 24.9%, Spain is at 22%, UK is again 21.7%, then Mexico, then France, Italy, Germany, US at 9%, and China is the only one at plus 3.2%. So that doesn't at all square off with Mr. Gurumurthy's figures. But leaving that aside now for a moment, Rathin, so what you're saying is that things are terrible. We are amongst the worst performing when it comes to the impact of this pandemic. But what's the way out of this? We just had on Mr. Chidambaram, former finance minister. He says you simply have to spend. You either have to borrow heavily, or if required, you have to print cash. The government is doing neither.
No, I think Mr. Chidambaram is only partly correct. Somebody has to spend. It doesn't have to be the government. So either we frame policies such that we persuade people to start spending more, and it's going to be difficult to do that with people who are facing this sort of growth slowdown, who simply don't have the money to spend more.
Exactly.
Or we have to persuade the private sector to spend more. And I think the government's attempt to boost liquidity measures was based on the premise that if these liquidity measures worked, if the relief given to the private sector worked, then the private sector would spend more on investment and on selling more. And if they did that, then that would put money in the hands of individuals,
but that's
combined with stuff like Jan Dhan and other money that has already been given out. That combined effect would be enough to reverse. But we simply do not know yet if that is working or not.
So
Therefore, it may be the case, if it is not working, that government will have to spend more, but there is a problem there. If government tries to spend more and that attempt fails, because remember, government spending initiatives have lots of leakages, then you would have a problem. So I need to know what the government will spend more on. And this is a problem with many sort of finance people, and I'm afraid that includes Mr. Chidambaram. They talk about spending more, but what are you going to spend it on?
Okay, so let me just come in for a second. Let me just come in for a second. So to your point about whether these liquidity measures have actually boosted private investment or has led to some kind of attempts by private players to invest more and therefore the trickle down, some preliminary numbers by CMI, Center for Monitoring Indian Economy, as you know, is suggesting that's not been the case. In fact, there's evidence to suggest that companies are parking more and more cash with the RBI rather than plowing it into investment. Again, this is all very preliminary. As far as then the government stepping in, Rathin, what people like Mr. Chidambaram are saying is that you essentially have to spend on putting cash in people's pockets, that you have to be much more generous with your transfers, whether it's PM Kisan, whether it's Jan Dhan, whatever it is. The amounts have to be much more sizable.
No. If you're going to put cash in people's pockets, then what is the guarantee they will spend that cash? The same thing that companies are doing, you could do. You put cash in my pocket, I'll go and park it in the banks or park it in the stock market.
This is the poor, though, we're talking about. This is at the lower end of the spectrum. So stock market may not, but yeah, they could put it in the bank. Yes.
They could put it anywhere. They could put it under their beds if they're afraid about what the future portends. So there's no automatic guarantee that if you give people money, they're going to spend it. So that's not fair to the government in some sense.
Okay, so then
the government has taken a call that the private sector would spend more. So just like my answer to that would be that if the private sector is parking the money in the banks, why are they not spending more, and what can we do to persuade them that there's a business case for spending more?
Okay.
I would say that before you put money into people's pockets, you have to ask, what are they going to spend it on? And if people are uncertain about their livelihoods going forward, they will not spend.
Okay, so what's the way out then? Because you're almost suggesting kind of zero-sum game. You're saying if the government spends more, there's no guarantee that people will use it. It won't necessarily drive consumer spending, which is a big problem. So what's the way out of this?
The way out of it is to be more clear on what you're spending on. I'll give you one example in a minute.
Okay.
The migrant workers crisis has told you what? that people live in extremely perilous circumstances in cities that causes fragility. And when you have a crisis that is increasingly looking like a crisis that's going to last at least another year, then migrant workers are fragile. You could have a walk back tomorrow if the numbers explode. What is the solution to that? Solution to that is to make migrant workers' lives more secure. And therefore, you try and spend money, or other state governments are given the money to spend to make sure that migrant workers live in better housing conditions, have access to better health conditions, better sanitation conditions, better transportation conditions. That is what you spend on. And if you spend on that, then there is reassurance in the economy. If there is reassurance, then any additional money you give people to spend more will be spent on increased consumption. When companies see that they have a labor force they can be confident about, they will then start investing in the economy, and we will pick up from where we left off in March. But for that, you need, as I've been arguing this, a medium-term spending plan that specifies the what. And no political party seems to be willing to discuss the what.
Okay. So first there is the what. Suppose you manage to come up with a spending plan, and let's say the government also has to, to spend. Private sector, sure, but the government also has to put some cash on the table. Where will the money come from?
I've been asking this question, Srinivasan, for 6 months, including on your channel. Number one, you can open a WMA window.
Explain that. Sorry. Explain the WMA window in simple terms.
RBI keeps a bunch of cash in its vaults. That cash is kept as a reserve. It's rupees.
Okay.
A Ways and Means Advance, that's a WMA, is an opportunity for governments when they need cash to go and borrow from the RBI.
Okay.
It has a limited time frame normally. Okay. That is 11 months, within a year.
Okay.
Now, in the view of this emergency, if you are able to make this cash available to state governments interest-free, and you knew that the state governments were going to spend this money on things that would actually bolster consumption spending and raise growth, then you give the state government this money and ask them to pay it back interest-free over a period of time. That would be option one. The second option would be, as I've been arguing for 6 months, go to the markets, tell all these people who are parking money with the RBI and the banks, hey, look, I need money and I'm going to spend it on reviving the economy. Buy a bond. I'm going to give you interest on this bond, but the repayment of this bond, I will announce later. It's called a console or a perpetual bond. That is exactly what the European Union has done. It has issued a bond. It has not said when the repayment will happen, but it has offered an attractive interest rate. And when people are sheltering, this becomes a very attractive way of getting finances. Srinivasan, resource mobilization is not the problem when you have a coherent plan. But 6 months down, we still do not have a coherent plan on what we will spend on.
Last point question to you. If this does not happen, if there is no spending or there is no plan to spend, what are we looking at?
We are looking at a slow and painful, possibly U-shaped, possibly V-shaped. If there's a second wave, a W-shaped, you can pick one of those alphabets, right? After any alphabet beyond T, U, V, W, Y, any alphabet beyond T.
You're talking of growth, or you're talking of the virus? You're talking of growth now, the growth curve.
About growth. I'm only talking about growth. I'm not an epidemiologist. I'm only talking about growth. But the point is that, how deep that V will be. It's not like writing a V in an exercise book. I could write a V on a huge wall, or I could write a V on a page. How deep will that V be? It will be deeper the longer you postpone having a spending battle plan. And therefore, our task is to have that spending battle plan in so that we can restore the economy by at least 2022 to where we were in 2020. That will not solve all our problems, because for the last 3 years, since 2016, 4 years, the Indian economy has already been declining in terms of growth. But just to get back to zero will take at least 2 years, and it will take longer. The longer we postpone, and then the deeper will become, and more volatile if it becomes a W, will become the letters of the alphabet.
All right. Rathin Roy, great talking to you. Thanks very much indeed.
Thank you, Srinivas.